All right, glad to have you back. Nigeria's young population presents a significant demographic dividends that can be harnessed to fuel economic growth through entrepreneurship and innovation. But the Africa's largest economy faced with complex economic issues, of course, even before 2023, while the nation boasts of abundant natural resources and other valuable minerals that can drive economic growth. Experts say the government has a crucial role to play in creating an enabling environment for businesses to thrive and grow. But what are the prospects and the outlook of this economy? I introduced him earlier. He's a partner, tax reporting and strategy. He's with PricewaterhouseCoopers. Mr. Kenneth Erikume, thank you so much. It's good to see you today on Suit.
Hi, Tolu. Nice to see you as well, and I'm happy to join the show today.
All right. Well, the entire 2024 budget, I want your comments on that. The assumptions and the revenue generation plans. I must say, do you think that is conservative enough considering what we face as a country?
Thanks, Tolu. So already the budget anticipates a deficit of 18 trillion naira. For me, that has always been, well, I would say the budget has always been a challenge, right? In recent times, especially because in terms of performance against revenue generation, we consistently underperform. But on the expenditure side, as you can imagine, we ultimately perform. So what that means is that the deficit that is being anticipated, if the trend continues, could be wider than the 18 trillion, which was anticipated in 2024. I strongly believe that the assumptions in the budget may be a bit optimistic. And therefore, in response to your question, not as conservative as is required. Because I want to believe that there could be some overestimation of revenue, and that deficit of 18 trillion could actually widen. Now, why do I say so? On the revenue assumption, the outlook historically has always been optimistic, because over time, the government doesn't perform when it comes to revenue. The composition of the revenue shows that about 43% is going to come from oil revenue. And this shows a heavy dependence on the volumes of crude that we are able to evacuate and produce from Nigeria. When you look at the assumption that we'll be doing 1.78 million barrels per day, that may require a bit of skepticism, because in 2023, the average performance was about 1.3 million barrels per day. I acknowledge that, towards the end of this year and, closer to these months, we've been able to ramp up production to, around 1.6 million barrels per day. But whether we'll be able to sustain that in 2024 and even improve that by adding additional barrels could be a challenge, because we need to really tackle the issue of oil theft, vandalism, insecurity, and in more recent times, the divestment by the foreign investors from the shallow water and inland assets. What we have seen, there's an expectation that the indigenous players should be able to manage the production better, but we haven't seen any scaling up in terms of production, because as you can imagine, it requires a lot of capital-intensive undertaking from the indigenous players who take on those assets. The other thing is that there is a bit of question around the crude oil price. I think it would most likely be stable. We're projecting about $78 per barrel. The issue of the Hamas-Israel, conflict could have a significant impact in pushing barrels up, especially if it is not managed, properly. But as you can see, there's a lot of interest in that war, and a lot of diplomacy has been going on. And therefore, it's unlikely that Iran would be impacted because, as you can imagine, even though there are some embargoes on Iran has been able to add, barrels, significant barrels into the global barrels that are available. And therefore, those sanctions have not been very effective. But if the conflict trickles into Iran, then there could be challenges. And of course, the other bit is the exchange rate. The exchange rate currently trades at 951 naira per dollar on NAFEM. The reality is that until the government is able to treat all the backlog of FX and also deepen the liquidity in the market, what you would have is that the reality on ground may not reflect the official exchange rate, which has been used to project how things will play out in terms of the budget. And then the final bit is around inflation. So inflation, the expectation, as you can imagine, is that things will stabilize between 21% and 22%. That will be a significant challenge because of the rise in food prices. The insecurity in the north. I know in the budget, the government has committed significant amounts into ensuring that internal security ramps up, but that's, the current insecurity in the north, as well as the increase in cost of petrol and petroleum products could actually impact on the price of goods. And of course, the depreciation of the naira. And as I mentioned, the real exchange rate. And when I say real exchange rate, if importers and manufacturers are unable to get the dollars at the official market, it would continue to put pressure on the price of consumables and inputs for manufacturing. So the government is still grappling with all these challenges. So from my perspective, I consider it to be quite optimistic and requires a lot of intervention for it to materialize. They are not insurmountable challenges, but they are significant challenges.
Well, of course, good breakdown as usual, touching all aspects of the issues. But that big elephant in the room, you've mentioned one of it. I think another one that flows with the FX thing is inflation, which has remained high and might remain same. You've also talked about global issues, which is mounting pressure on supply chains and affecting business flows. Manufacturing is being hit, supply and all of that. So what is the outlook? Some will say it's kind of bleak, looking at what we see.
I'm not going to bet against Nigeria, I must say. And this is not just me being a patriot, but we have consistently shown a bit of resilience. And that resilience comes from the innovation of the Nigerian, especially at the micro, small, and medium enterprises. I'm not so sure that historically that group has gotten significant support from government. So it is not, that innovation is not coming from support from government, but just sheer innovation by Nigerian businesses and the inherent DNA of Nigerians to survive and to add value, right? But like you rightly identified, and I sort of touched on in my introduction, the issue of inflation, my expectation is that would continue to remain quite elevated, at least till the end of the year. And it could trickle into 2024. And what are the main drivers for this? The first one is obviously the exchange rate, like I rightly identified. Until we wean ourselves from import dependency, until we convert the Nigerian economy into an economy that is self-sustainable through import substitution and through driving local value addition. The reality of things is that we would continue to grapple with this issue of, the depreciation of the naira. So as you can imagine, a lot of the day-to-day items, consumables, from food to clothing to wares to products, we largely depend on the global market for a lot of things. And then for intangibles as well, we haven't been able to crack the knotty issue of the fact that from a hospitality vacationing perspective, many Nigerians, especially in the upper class, still patronize and look for those foreign travels. And of course, the political class is not excluded. And I know there's been some controversy around that in terms of participation at, global events and things like that. But if we look away from the politics and just look generally, that pressure is still there. And then we have all these, data that we see on Nigerians that attend foreign institutions for education, professional subscriptions and things, and even things like insurance as well. So I suspect that there'll be that sustenance of import-related inflation that we'll continue to grapple with. And it will take a bit of time before some of the measures that the government has undertaken around the import substitution, around attracting investments, foreign direct investments will begin to kick in. So in the interim, that would be a bit of challenge for the central bank. The other bit is the festivities. The Christmas season, the New Year, the celebrations. We'll see a lot of spending as demand for food, rice, chicken, and the likes will continue to have an impact on inflation. What happens around this time, Tolu, is that many of us, apart from the things we consume, we also have to give, that extended gift to the community around us, our domestic support, our domestic staff, people around us, the needy and things like that. And as you can imagine, when you do the comparison of a bag of rice between last year and this year, or the price of chicken and poultry products, the inflation would kick in heavily. And then I've also mentioned the issue of travel, events and shows, dirty December, as you can imagine, for us, the tourism sector, the hospitality sector will be abuzz in Lagos and across the country, by the way. And that would have an impact on inflation as well. And then the issue of increased cost of manufactured items. And I want to at this point, laud and appreciate some of the interventions and things that the central bank is looking at to ensure that they drive liquidity. But in the interim, a lot of the manufacturing players in the manufacturing sector are really struggling. The likes of household products, pharmaceuticals, health drinks, detergents. The cost of production is actually high because they they have to source for the FX. And of course, until we get infrastructure right, the factors that you employ in production continues to remain high. And let us not forget the issue around borrowing. On the one hand,
Yeah, Mr. Kenneth Erikome, I don't know if you can hear me. Okay, go
on
ahead.
borrowing. Yeah. So the manufacturing sector relies heavily on borrowing to be able to convert their factors into products. And therefore, as interest rates continue to be on the high side, the cost of capital and things like that impacts on the cost of production. So in order not to lose margins, they have to pass that on to customers. So this is something we'll continue to see. And then the global supply chain hasn't helped at all. Many countries are looking at food security. India, some months back, imposed a ban on rice. So that would continue to see the ripple effect across the world, including Nigeria.
Now, finally, before I let you already hit on the interventions and what we should expect. But do you think Nigeria is still a place to invest, considering all these challenges we've highlighted during our conversation? Many would just say, yes, Nigeria has a youthful population that remains very attractive. What does this mean for us as a country?
So, like I said, I'm not going to bet against Nigeria. I actually place my bets where I am. I'm very optimistic about the DNA of Nigerians. And I think based on what I've seen in terms of the body language of the government, there are some positive signs that we can take out. I know a lot of people, raise controversies and things around spending. But the government has taken some steps around that. And, it may take a bit of time to actually, deal with all the interests and ensure that there is a balance between expectation and what we see. But as you can imagine, I believe that we still have a viable market.
Good.
Especially for manufacturing, consumables, and the likes. So our market population continues to be strong. You rightly identify the fact that we are largely a young population compared to other, sections of the world. And as long as we continue to invest in education and upskilling that population, we'll be able to drive value in the medium term. I expect that we'll begin to see in the foreseeable future a lot of play around the global outsourcing sector where Nigeria can actually play in terms of adding value from an outsourcing perspective. The signaling effect of government has shown that they want to pursue a market-driven economy and allow foreign investors to repatriate their funds. So I also suspect that when things stabilize, there'll be a lot of foreign direct investment, driving investment into, real estate, into the stock market, into the manufacturing sector. And we also have a budding fintech sector as well. And also the positive indication coming from the Nigerian stock market. We've had some positive runs. Market capitalization increased by 40% from 29 trillion to 39 trillion in November. So that's positive. So in many other jurisdictions where return for investments is sort of drying up, our capital market still provides opportunity for people to make those plays and get a good return. And then our natural resources, and we must look into that. Tolu, many times I've come into your program, I've mentioned the issue of natural gas. but we must also look at the solid mineral sector, all the plays around energy transition and ESG, so where we can actually contribute to the global value chain around production of batteries. So we should look at our deposits for those solid minerals, lithium and the likes, and see how we harness them and contribute to the global value chain, and in exchange, generate some FX at the same time. So, with these few points, I believe that there are indications that allow us to be positive from that perspective.
It's a good one. As usual, I've been speaking to Mr. Kenneth Rikome. Thank you so much, partner, tax reporting and strategy with PricewaterhouseCoopers. Do enjoy the rest of your day. Let you get back to your meetings. I'll see you.
Thank you. Thank you very much. Enjoy. Bye.